I'm a six-figure funded trader, and in this video I'm going to backtest a strategy that had a 90% win rate during the month of September. Not only that, it resulted in a 17% gain, which allowed a lot of members at Toto Capital not only get funded, but also receive payouts from the prop firms. I'm going to backtest this strategy step by step, and by the end of this video, you should have a full understanding of exactly how to operate this strategy within the financial markets. Without any further ado, let's just jump straight into this video so I can introduce you guys to this extremely profitable smart money concept strategy. Okay, so let's just jump straight into this backtesting session. This is for the month of September on the US 500, also known as the SPX. And let's just break down, and you're going to understand my exact thought process and reasoning behind why I'm executing the trades within the live markets and as the trades are presenting themselves. I think that provides an extreme amount of value for you guys. So initially, what we want to see is a liquidity sweep, either of buy side or sell side liquidity. We then also want to pair that with a directional bias, okay? And then we look for our entry model to get either long or short within the markets. So in terms of a directional bias, you're going to ask, how do we know which direction that we actually want to be looking at trading? Because, a lot of new traders, often you find that they're sort of chopping and changing every sort of few minutes. 1 minute they're long, 1 minute they're short, and they're just getting sort of chopped up within the market. So we have a directional bias, which is simply using the EMAs within the market. So this is a very simple trend filter that indicates to us where momentum is more likely to head to. And when we understand that, we can then pair that with our liquidity-based concepts in order to get an accurate judgment on where the market is likely to head. So right here, you can see the 50 is on the top, the 100 is in the middle, and the 200 is on the bottom. These are exponential moving averages, and when they are in order like this, that indicates to us that momentum is to the upside, and therefore we are only looking for longs on this market. Another thing to note is we are only trading between the London session and the New York session. And this is a question that I get all the time, is what is the specific timings of these kill zones, okay? The London session between 8 a.m. and 10 a.m., the New York session between 1 p.m. and 3 p.m. GMT. So that's UK time. So we're only executing between these kill zones. The reason why is because that is when the most amount of volume is coming into the markets. Therefore, that's when we're going to see the trending plays within the market. So let's just jump into this backtesting session. I hope you enjoy it. I hope you take a lot of value from it. And yeah, make sure you stick around to the end because there's a huge amount of value that is going to be presented to you within this video. So jumping straight in here, this is during the London session. So right now, this is 8 a.m. GMT, Monday, 2nd of September. What you can see here is we're getting a liquidity sweep, sweeping that sell side liquidity that's resting below the Asian session low. Our directional bias is to the upside. We're only looking for longs, and therefore we're looking for our entry model to get long within this market. So this is a liquidity sweep right here. And now we've seen an injection of bullish pressure once we've seen the liquidity sweep. So we're looking to get long on the break of that candle's high right there, with invalidation below the liquidity sweep right here. Give it a little bit of room to breathe, simply targeting a mechanical 1 to 2 risk to reward. Now it's really up to yourself on how you want to refine and trade your own strategy. For me personally, due to my backtesting data, I like to target a 1 to 2. That is what has given me the best results with this strategy. So we are triggered in right here on the break of that candle's high, and we're simply looking to target a 1 to 2. So you can see right here, that 1 to 2 was hit during the London session, and you are in and out of the market. So this is the first trade of September, and let's move on to the next following session. Okay, the next trade took place on the 5th of September. We're entering into the London session kill zone. What you can see is we are sell bias on the market because the EMAs are all in order and they are sloping to the downside. So the 50s on the bottom, 100s in the middle, 200 is on the top. We have buy side liquidity that's resting above the Asian session high. Therefore, we need to see a raid of that buy side liquidity in order to look for a potential short trade on the market. You can see that's what we get right here. We raid that buy side liquidity and then we get a injection of bearish pressure. We get a bearish candle close. Limit order, so sell limit on the break of that candle low. Stop loss above the liquidity sweep. Target a mechanical 1 to 2 risk to reward. You can see we're triggered in right here. And this trade during the London session smashes take profit for another 1 to 2 risk to reward. Continue to play out this market right here. So we also have buy side liquidity that's now resting above the London session high. So if we see a sweep of that liquidity during the New York kill zone, then we can look to engage in another short trade on this market. So playing this session on, you can see we get a injection right here. We manipulate this buy side liquidity and then we get a big strong rejection right here. So we can enter a short trade on the break of that candle's low. In validation, this is what you have to ask yourself. Okay, this is valid. Okay, and you have to ask, is there like a high to the left, which can give you a little bit of coverage? So for example, this high right here isn't much further in terms of a stop loss placement. So that can give us a little bit of coverage right there. We triggered in right here. And then price starts pushing to the downside. And ultimately the following day during the London session, this trade actually hits take profit for a 1 to 2 risk to reward. So it's very important, you've got to ask yourself when you're placing these trades, is there a logical area where we can give ourselves a little bit of coverage, which still makes logical sense? If so, go ahead, extend your stop loss ever so slightly, just to give yourself a little bit of room to breathe within the market. Okay, so this is now the following day, the 6th of September. So this is a Friday. We are still sell biased on this market. There's two potential outcomes that we can look for, either a sweep of the London session high right here, the buy side liquidity, or if we see a deep correction above the Asian session high, we can also look for a run of that buy side liquidity and then look for a potential short trade on the market. So during the New York session, during the New York kill zone, you can see we actually get a sweep of both of these liquidity areas. So you've got the London session and the Asian session. Both of them areas were liquidated, and then we're just simply looking for a bearish confirmation. That's what we get right here. Entry on the break of that candle low, and validation above the liquidity sweep right there, and then look to target a 1 to 2 risk to reward. You can see this trade hit take profit right here for a 1 to 2 risk to reward. Moving on to the next session. So this is now the 12th of September. Entering into the New York session, what you can see is we are buy bias on this market currently. We have sell side liquidity resting below the London session low. So during the New York kill zone, we're looking for a sweep of sell side liquidity and then a injection of bullish pressure, which is exactly what we get here. So entries on the break of that candle high, invalidation below the liquidity sweep right there, and then look to target a 1 to 2 risk to reward. So this is held overnight right here, currently running around a 1 to 1.3. However, we are looking for a 1 to 2 on this trade. This is the following day heading into the London session right here. And you can see the take profit was hit actually in the New York session the following day. So that just shows, this trade is a testimony just to show that, not all trades are just going to go straight to take profit. This trade was actually held for around 24 hours. So, you have to ask yourself, do you have the conviction? Do you have the belief? Do you have the patience to be able to actually hold these trades? Because as I said, this was held for 24 hours. So let's move on to the next trade. So we're heading into the London session. So far, we are actually 5 for 5. So we've took 5 trades and we've won 5 trades. And don't get me wrong, yes, that is a 100% win rate so far. This strategy within the month of September is certainly performing above benchmark. Don't get me wrong, it's not going to perform like this every single month. Strategy is certainly outperforming the equity curve of expectation. So please do bear that in mind, okay? You are expecting some months you're going to have losing months. You may lose 1, 2, 3%, but within this month of September, we are performing exceptionally well. So heading into the London session right here, what you can see is we've had a sweep of the Asian session low right there. So we've swept that sell side liquidity. We are buy biased because all of the EMAs are in order. Momentum is to the upside. And within the London session kill zone, 8 a.m., we get a bullish confirmation indicating that buyers are stepping into the market after we've seen the liquidity sweep. Stop loss just below the liquidity sweep and target 1 to 2. Triggered in right here. And during the London session, take profit was hit here for a 1 to 2 on this trade. Okay, so we're heading into the New York session. We're looking for simply a sweep of this sell side liquidity that's resting below the London session low, and then a injection of bullish pressure. That is what we get right here. So entries on the break of that candle high, invalidation below the liquidity sweep. If we look left, we can have a bit of coverage right here. Okay. So we're triggered in right here. And you can see this trade ultimately hit our stop loss. So minus 1%, minus 1R on this trade. Okay, so this is the 18th of September. We're heading into the London session kill zone, and we are buy bias on the market. All the EMAs are sloping to the upside, indicating bullish momentum. We're simply looking for a liquidity sweep of the Asian session low, and then a bullish confirmation. So we sweep the Asian session low right here, and then we get a bullish confirmation right here. So you may ask, okay, why are we entering on the break of this candle right here? And it's very, very simple. So, if this candle broke this first bullish candle's high, then we would be triggered long with the market. However, you can see we wouldn't have actually got triggered in, but we still get another bullish candle close. So now we can just move our order down ever so slightly. Invalidation still below the liquidity sweep, and then we target a 1 to 2 risk to reward. So we're triggered in right here. And during the pre-New York session at 12:15, we hit take profit for a 1 to 2 risk to reward on this trade. Okay, so this is now the 23rd of September. This is a Monday, heading into the London kill zone. We are buy biased on this market as per the EMAs. We see a sweep of sell side liquidity below the Asian session low right here. And we're simply looking for a bullish confirmation to get long in this market. You can see that's what we get right here. So entries on the break of that candle high, invalidation below the liquidity sweep, and then look to target a 1 to 2. You can see here, in terms of coverage, we can increase it ever so slightly just to cover this fractal low over here. It doesn't take much more for our stop loss to actually do that, because it would be here anyway. Just a tiny bit more, we can actually add a bit of coverage. Triggered in right here, and let's play this trade on. So this looks like it's going to be sort of more of a painful hold overnight, heading into the London session the following day. See here, so we're looking for a 1 to 2 on this trade. So we've still not hit take profit. And then we're heading into the following day NY session. Still holding this trade right here. And this was actually a 2-day hold coming up right here. Heading into the London session. And there's actually another setup within this one. So what you would do in this instance, so you can see this trade is currently running. It's still not hit take profit. However, during the London session on the following day, what you can see is we're still buy bias. We get a run of sell side liquidity right here. And then we're looking for a bullish confirmation during the London session, which is what we get right here. So we can enter on the break of that candle high. When we do this, so this is scaling in positions, and when we do this, you need to ensure that the first position is going to break even. So this one we're targeting a 1 to 2. We're triggered in right there. The first position goes to break even as soon as you're triggered in, and then you're going to allow this trade to play out. Because you only want to be risking 1 unit of risk at one given time within the market. If you're going to enter and scale in, make sure the first position is break even, and make sure that if it does present itself, that you are locking in that position and that you're only risking 1% at a given time within the market. So you can see during that New York session right there, both of them trades ended up hitting take profit. So there's a 1 to 2 here and also another 1 to 2 right here. This right here is the results of our backtesting session. What you can see was there across the month of September, there was 10 trades, there was 9 wins, there was 1 loss, and resulting in a 17% gain across the full month of September. And don't get me wrong, you're not going to get this every single month. However, this should outline my thought processes, my reasonings behind the trades, and exactly the frameworks that I am following when I'm executing in the live markets on a daily basis. I hope you guys did enjoy this video. Make sure to join the free Discord. The link is in the description of this video for free analysis and to stay ahead of the curve with upcoming YouTube videos. If you did like this video, and let me know down below if you have any comments, queries, or questions, and I will get back to all of you guys. Hope you did enjoy this one. As I said, it's a bit of a longer one, but I hope I provided a lot of value. I'm sure I did. Thanks for your time as always, and I will see you in the next video. Take care, guys. Bye-bye.